What is going on YouTube? Hayden back making another brand new Crypto TV episode. In today's video, we are going to be looking at XRP, Ethereum, Bitcoin, Litecoin, as well as the S&P 500. As you guys know, I like to do a different cryptocurrency here on the channel every single week with your guys' help. So definitely comment your favorite cryptocurrency or altcoin down in the comments below. I'll be picking one to review for next week's episodes. More importantly, what we're going to be looking at in today's episode is pretty much a general consensus of the overall market right now. There's a lot of fear and FUD flowing around throughout this market right now, and we're starting to see prices of XRP and these major cryptocurrencies kind of consolidate off a small support level, which I can understand as most of these cryptocurrencies actually manage to enter an oversold market, retesting the oversold on most of their relative strength indicators, which is a good sign short term for a small recovery. But I do think with our major breach of most of our support levels, it is still in a bearish trajectory, which should ultimately head us lower. So I'm going to be giving you guys a few new targets to look out for, where exactly and how exactly I think the markets are going to play out for the next couple of days. So definitely be prepared and stick around. If you do plan on buying into XRP or any of these cryptocurrencies and are ready to do so, definitely swing by today's video. More importantly, today's episode is sponsored by Not SafeMoon. So if you guys are also interested in investing in a new cryptocurrency project that is not SafeMoon, but actually has better benefits than that, definitely stick around to the end of today's episode, as I do have some information to go over with you guys. Otherwise, if you are new to the channel, definitely make sure to subscribe, turn on post notifications, smash the like button for the YouTube algorithm, and let's jump into today's video. Alright, so I'm not really sure where to start today's video at. I am going to be looking at the current coin market cap. I do know that for the most part we are in some sort of consolidation phase for today and tomorrow. Or maybe the next couple of days, to be honest with you. We did actually hit a bottom, as you guys can see on most of these charts here on the last 7 days. They ended up correcting all the way down, retesting a bottom support level, and then... Alright, so as you guys can see, I'm on the current coin market cap, and most cryptocurrencies are just trading out sideways for right now. We're pretty much just consolidating. As you can see, a little bit of volume came back into the markets, but overall, volume is down across the board. We're actually seeing most of these cryptocurrencies, yes, they did kind of plateau and hit a bottom, and are correcting back up a little bit, but it's only because we're retesting oversold markets on the bottom. On the relative strength indicator, I do believe we are going to still correct lower, which is unfortunate, but I just want to prepare you guys for that. Most of these cryptocurrencies are still not really looking too hot. We do have Doge, which seems to be, rebounding the most, with the most potential here, up 10% in literally just a day across the board, but it is overall down 22%, and as most are, all the cryptocurrencies are down about 20 to 30% across the board. So we're still in this bear market that most of you guys have to understand. Now, just a quick announcement. I've been, a lot of people come up to me on a day-to-day basis talking about the cryptocurrency space, and most of them are fairly new to just investing in finance at all. And as great as it is for these people to actually be learning about cryptocurrency and learning about financial investment strategies, they don't really have as much experience as I believe I do, and some of you guys do, for being here on the channel for quite some time now. So when I hear these people talking about how this is just a small dip in the market and we're probably going to see a big run right after that, it just gets me worried that people are in this denial phase that don't understand that we're pretty much entering a bear market. We lost about 50% of our overall market cap in less than a week, and we are still on a trajectory to correct lower. I predict that we're going to be seeing about an 80% correction on these cryptocurrencies that should pull us back down for Bitcoin to retest like $10,000 to $15,000, and all the other cryptocurrencies to move with it about 80%. I did put out a video yesterday that I wanted to know your guys' opinion on. I did a Shiba Inu video, whether or not it's mathematically possible and whatnot. If you guys like that, definitely make sure to watch that episode, as I do think we have to now make another video discussing how burning tokens may or may not influence the actual price of the Shiba Inu coin, and how that might affect not only Shiba, but all these cryptocurrencies as a whole. Very interesting, because it's not just Shiba that's burning tokens. So definitely let me know in the comments if you're interested in that. Now to jump directly into the technical analysis. As you guys can mainly see looking at these big major cryptocurrencies, most of them are in some sort of descending fractal correcting us lower. if not every crypto. We have Litecoin in some sort of descending fractal. We have Bitcoin in one, we have Ethereum in one, and we have XRP also forming one, which we could draw on. It's just not as clear and bright as these other cryptocurrencies are. But for right now, I do believe XRP and all the other cryptocurrencies are hitting a bottom support level as they are starting to retest oversold on the bottom of the RSI. As you can see right here, we did just slightly dip into oversold. You can see Ethereum did the same, Bitcoin, and so on and so forth, as we do have some sort of downtrend that's actually forming on Bitcoin. So mainly how this is going to affect the overall market, and hopefully a lot of other YouTubers are talking about this, but Bitcoin has a vital and crucial support level set at $30,000. This is a big support level on this crypto. We were talking about buying in when we retested 40K. We actually talked about buying it to leverage it to the upside when we retested 40K, anticipating it to actually close above that resistance level, which we didn't do. We immediately reversed down, and instead of actually losing all of our profits and liquidating ourselves from hitting the stop loss, we actually canceled our order and came into a short. And we literally shorted the coin all the way back down to the bottom. We went all the way down to, I think it was $28,700. And when we went back up, it liquidated us with the stop loss, but we were able to lock in a significant amount of profit. So now I'm back out of this market. So ultimately, what I'm looking for right now is a good time to reinvest my profits back into the market and capitalize on a run. And where that support level lies is literally this 30K support. You can see that for the most part, even though we're having bearish crosses on the MACD, this is a very strong support level for 30K for Bitcoin. So we know that ultimately Bitcoin works in like increments, 10,000, 20,000, 30,000, 40,000, and all the way up. But 30K is that support barrier. And if we break through that, we know the second one will fall us down to $20,000 as a support barrier. And you can clearly see the support resistances and supports that this coin has at 20K and then at 10K. So notice the problem relies now on if we break through the 30K support that we're holding right now, which doesn't look too good. It's an immediate drop. There's really no support or smaller supports trending inside 30 and 20K. So the second we see correction below $30,000 and we actually close the daily candle below 30K, that's an opportunity to buy in, not just for Bitcoin, but all these cryptocurrencies as a whole, and short it down to $20,000. And realistically, I do think it's possible. We haven't yet shown any good signs of swinging back to the upside on any of these cryptocurrencies overall. All their major support levels that they had have been broken, and a downtrend has now been forming to use as a resistance for the upside. Even for Ethereum, breaking through a major ascending fractal, swinging extremely bearish, all show signs of bearish signs moving forward. You can even see on the weekly here where we're kind of looking to go to. And ultimately, this is what I believe strongly in, is the fact that Bitcoin and some of these other major cryptocurrencies have become so overbought on their weekly and monthly charts that it only makes sense for us to correct lower. You can even see right here, we're just now entering into a more neutral level on the cryptocurrency. As you can see, for the most part, for Bitcoin, it was extremely overbought for months now. And you can see we've just now entered about 60 on the relative strength indicator. So we got a ways to go to the downside. And even on the weekly, I believe we are going to come back to retest bottom supports, which is about $24,000 to $20,000. So I do think we're going to be retesting that red band right there very soon. As you can see, major swings to the upside. We always come back down, no matter what, to retest our moving averages. Let's just look real quick at back in 2017, 2018, we had our major pump to the upside, and a lot of people were very happy. Everyone thought that at the 20K level, we were going to be swinging back up to the 40K level. We thought at 20K, we would shoot all the way up to $40,000 or $50,000, which we didn't do. And we corrected lower. This was the denial phase. People then thought we were going to rally back up, and we didn't, still with a downtrend on this coin. And ultimately, we corrected lower and lower and lower. Yes, there were some small pumps to the upside, which we can still experience within Bitcoin. Just be prepared for that. But ultimately, the factor is we came back down to retest the moving average, which was at $5,700, and eventually breaking through it to $3,000. Now, flash forward to 2021, we are still on our way down with a bearish trajectory to its moving average. And it will, and I can almost guarantee that we will be retesting its moving average back closer to 20K. So be prepared to see this correction still take place. Yes, we might have some small hiccups and some small dips before then, but ultimately the direction that this crypto wants to move to is down to 20K long term. So you guys just have to be prepared and understand that we are still going to be entering what appears to be a bear market, and it's not going to leave anytime soon to just reverse back up, hit 60K, and then explode to 100,000. People are leaving markets. Elon Musk and all their other financial institutions are following along suit and selling off their cryptocurrency, and it's a cyclical market. So we will be seeing another pump, soon within crypto, maybe in a year or two. For the short term right now of the next year, we're probably going to be seeing corrections back down to $20,000. And that's my target for the next couple of months, is to eventually retest $20,000 support levels. Now, short term, where do I see most of these cryptos going to? Short term is a different question. I do think with these markets and the way they're trending out, there has been some sort of descending fractal that is forming on these coins. And we haven't yet proven otherwise to break through these resistances. Now, notice on Litecoin, there's a possibility of it retesting 143 before correcting lower. And for Bitcoin, it might be retesting maybe a high of 34.5 and then falling lower. And same thing with Ethereum, which would hit like $2,000 and then correct lower. They all have a slight bearish downtrend, and they're all going to probably retest resistance and correct lower. Now, obviously, if you're a moderate to an aggressive style of trader, you can obviously buy in when cryptocurrency decides to retest those top resistances. For example, Ethereum, if we were to at some point retest the top here at like $2,100, you would pretty much gamble on a short to swing it back down to like $1,500. But this is an aggressive style of trade, and it's not something I want to play around with, because as a conservative trader, I like to make more profits than lose, but I don't like to balance that all out. So conservatively, my goal right now, and this goal is what you guys should be paying attention to, is looking at the $30,000 support level for Bitcoin. If we break through $30,000 and close below here, as we almost did 3 days ago, it is going to be a big bearish trajectory all the way down to 20K. And understand that a pull from, let's say, 30K down to 20K, which is about a 36% drop, pretty much putting us into what would be about, I think, a 70% correction from the top. This is, no, it's 68, it's almost a 70% correction. So we're going to see about a 30% correction from the 30K to the 36% correction. So if we then draw that over to here, from the ultimate break, which I would consider probably at 55 cents, a 30% drop would actually send this coin down to, I would say, closer to 37 cents for XRP. For Ethereum, that would look something like, let's see, 30% correction, sending us down to maybe $1,200. So there's a lot of bearish signals here. Bitcoin will be the biggest signal and the biggest flag for reversal, so that's where most of my focus is currently. And everything is bearish, guys. Understand, we're not overbought yet or oversold on the weekly. So there's plenty of room long term to continue to dump lower. Not only that, all the signals are flashing bearish as MACDs are crossing to the negative, as you can see right here. This is a bearish cross. This is not a good sign. So personally, it's a short market, guys. We're going to short cryptocurrencies. That's pretty much what I've been doing. Hopefully you guys understand that. All right, guys, I want to give a huge shout out to Not Safe Moon for sponsoring today's episode. So this is not your normal Moon coin. No lopsided liquidity dumps, no sending LP tokens to devs, 6% reflection to hodlers, 2% true burns on every transaction, Mooncoin analytics dashboard for all your accounts and coins. Not Safe Moon was founded and developed by Ryan Dunn and launched publicly May 4th of 2021. The foundation of the project rests on the 10-page technical analysis, which goes into great depth outlining the intrinsic flaws of the Mooncoin cloned contracts. Although the analysis uses the SafeMoon contract as the reference to these issues, it is not isolated to them alone. There are hundreds of these clones out there, as most other cryptocurrencies are, and as we know, Bitcoin is the exact same thing. Everything is pretty much clones of Bitcoin, Ethereum, Litecoin, so on and so forth. So the purpose of their project has gone beyond just providing a token with a unique contract which has solved the flawed functions found in Moon clones, but to also provide tools which will allow average investors to see and interpret this information in an easy to digest way and use their disposal. So, until then, there has been a price predicting bot running on Twitter to inform the masses of mathematical madness, and a beta version of their dashboard available to view on their website. So this project places extremely high value on transparency, honesty, and the ability to promote education in this complicated and often ruthless DeFi space. So by contributing to a liquidity pool, it doesn't work if it's one-sided, as we know. This also destroys the value of the token in the same way a whale selling does. This is why Not Safe Moon has no lopsided liquidity, and what the devs of the other projects don't tell you is that most keep the LP tokens for withdrawing liquidity at a later date. So some hold over 30% of the liquidity of their actual token, and Not Safe Moon has no LP token hoarding, which means they don't copy what most of these other, pump fake cryptocurrencies are. So another feature is that the rewards go to people and not to robots, which means sending rewards to their liquidity pool cuts into holders' rewards and lopsides the pool, and not actually to robots or to other people's liquidity. So Not Safe Moon doesn't take advantage of your gas. Every moon coin they test makes you pay the gas, and if they need to do a lopsided liquidity dump and you are the next one to make a transaction, you end up paying about 4 to 5 times the normal gas fees for these cryptocurrencies. So all dev wallet addresses are published and open for any one of you. 2% of the initial supply is held in a separate wallet for marketing and promos to fund continued growth. And then the remaining tokens were burned at the pre-sale. And most burn addresses don't actually have incoming transactions after the pre-sale. The 2% burn fee is sent to the burn address on every transaction and verifiable on the blockchain too. So there's really no sending rewards directly to the burn. Those rewards are yours. So what were the flaws found in these Moon clone contracts? The Not Safe Moon white paper does really a great job overall of outlining this in layman's terms, yet there are obviously other Moon clone exploits which were found as this project continues to be developed overall. Also, the Moon tracking dashboard is a product currently in development, and a very near release is coming very soon, which is the V1 free tier, which is the use case goal and to track balances of your currently owned Moon coins. So you can basically show you what your balances would be if the lopsided liquidity dumps didn't occur on your Moon coins. A fee tracker they also have, which shows the true percentages of what the burn rate and how the rewards from these coins are actually being distributed. And then the dump threshold of each of these tokens show a progress bar to when the lopsided token dumps are about to occur, and the ownership bug, which will also allow you to search contracts and reveal whether they have been renounced ownership bug. So overall, these are the current functions, which will be completely free to the public at release on the Not Safe Moon website. And then as the dashboard continues to be developed, higher tier analytics will be added, and there will be a tier system in place which requires users to either hold Not Safe Moon tokens, LP tokens, or a combined of the two. So the amount of Not Safe Moon required to access the higher tiers is obviously not yet determined because it's still in production, but at launch the V1 will be absolutely free for everyone, and the roadmap places this free V1 dashboard to be released at the end of June, which is right around now, so we'll see when it does actually get released. So if you glance at the roadmap, you may actually notice the dashboard is not the only use case Not Safe Moon has planned. There is an innovative new concept to come, which will be implemented and paired with the Moon tracking dashboard, and its existence will also stabilize the benefit of Not Safe Moon tokens. So because this is obviously a new use case and innovative in nature, they are withholding any more details from the public until they're actually closer to their launch, which is in Q4. Otherwise, once again, huge shout out to Not Safe Moon for sponsoring today's episode. Remember, guys, new cryptocurrencies and new ICO launches are risky, so definitely don't invest any money you can't afford to lose, like your house or rent payment. Otherwise, I'll see you guys in tomorrow's episode. Definitely make sure to subscribe, smash the like button for the YouTube algorithm, turn on post notifications, and I'll see you tomorrow. Peace.